What if I told you that the economic crises you see on the news, the rise in prices, the sudden market crashes, and even the value of the money in your wallet, aren't completely controlled by your government? What if behind every decision, interest rates, credit supply, inflation, and even the direction of global trade, a hidden network operates silently, without ever appearing on election ballots? Today, we follow the trail of this invisible system, a web of central banks, private lenders, financial institutions, and global agreements that quietly influence every economy on Earth. Because the real mystery is this: if nations print the money, then who controls the nations? Let's begin. To understand today's hidden monetary network, we must go back over 100 years, to a time when global finance had no single structure, no unified control, and no shared rules. Every nation printed its own money without coordination. And then suddenly, almost overnight, global powers decided to change everything. In 1913, a group of bankers, economists, and political leaders met in secrecy on a private island to design a new monetary system. That system became the Federal Reserve. But here's where the twist begins. The Federal Reserve was not designed like a typical government department. It operated independently, with private oversight and enormous influence. And over the next decades, other countries built similar systems. This wasn't an accident. This was the rise of a network, one that stretched across borders. But why? What were they trying to control? The answer comes next. After World War II, the world economy was in chaos. Currencies collapsed, inflation exploded, nations were desperate. And in 1944, 44 countries met at a small hotel in Bretton Woods, USA. This meeting created the IMF, International Monetary Fund, the World Bank, a new set of monetary rules, and the US dollar as the world's anchor currency. This was the birth of the modern global monetary network. But here's the secret no one explained publicly. By making the dollar the center of global trade, the US gained unmatched financial power, and every nation tied their currency, and therefore their economy, to decisions made thousands of miles away. One meeting, one agreement, global dependence, permanently established. As the decades passed, central banks worldwide gained tools that nations never had before. Interest rate control, open market operations, credit tightening, liquidity injections, emergency lending. These tools allowed them to influence unemployment, control inflation, shape the housing market, regulate consumer borrowing, manage recession cycles. But with greater power came greater secrecy. Meetings became closed-door. Policies were coded in technical language. Global coordination became normal, even though voters had no say in it, and the IMF, it became the doctor of global economies, stepping in whenever nations were in crisis, but prescribing treatments that often came with long-term dependence. Loans, conditions, reforms, a cycle that many countries still struggle to escape. By the 1970s, cracks began to appear. The US could no longer support the dollar with gold. President Nixon made a shocking announcement. The US will temporarily suspend the gold standard. Temporary became permanent. And overnight, every global currency became debt-backed, not asset-backed. Money was no longer tied to gold, it was tied to trust. But trust can be manipulated. From this moment forward, debt became easier to create. Banks could lend more than ever, inflation became permanent, and global economies became increasingly synchronized and fragile. The modern financial world was now officially built on debt, not value. You don't see the IMF when you fill your gas tank. You don't hear the Federal Reserve when you pay your bills. You don't notice the Bank of International Settlements when you swipe your credit card. But they affect the price of your groceries, your mortgage, your job stability, your interest rates, your purchasing power, and the value of your savings. This hidden network doesn't need your vote, because it doesn't run on democracy. It runs on influence, coordination, and long-term economic control. Every crisis minus 2008, 2020, 2023 strengthens this system even more. Why? Because each crisis requires more intervention, which leads to more power for the network. Governments attempt fixes: money printing, interest rate adjustments, bailouts, regulations, stimulus packages, loan forgiveness. But every fix causes new problems. Rates cut? Gives inflation rises. Rates raised? Gives recession begins. More money printed? Gives currency weakens. Less liquidity? Gives markets crash. It's not failure. It's design. A system built on debt must create more debt to survive. A system controlled by central networks must coordinate more tightly to stay in power. And the cycle repeats. In the last 20 years, central banks created over $25 trillion from nothing. Global debt has crossed $307 trillion, the highest in human history. 60% of all US dollars were printed in the last 5 years. 88% of global trade uses the US dollar. 70+ countries depend on IMF or World Bank programs. And 90% of your money exists only as digital entries, not physical cash. This is not coincidence, this is coordination. The monetary network is no longer behind the scenes, but above the scenes, shaping everything. If you want more deep breakdowns like this, about money, global systems, hidden mechanics, and economic realities, then hit subscribe, drop a comment, and share this video with someone who needs to understand the system behind the system. Because once you see the hidden network, you can never unsee it.